Good morning, dear students. This is Mr. Abdurrahman again with another session that is designed for business studies subject within the level of IGCC. Today's topic is another one, which is going to be mainly focusing on talking about the finance. We will split it into many parts. It might be two parts or three parts. And in this part, or the first part, we're going to talk about mainly answering or fulfilling two things. Number one, we need to understand why the finance is very important for business. And after that, we'll talk about the concept of or the types of finance. Mainly, there's two ways to distinguish between finance types. And we'll talk about the first method, which is talking about the concept of short and long term finance. What is the differences between them is what we're gonna study in this topic. First thing first. Mainly, I have a small question that I want to answer at the beginning of this session. It is the fact is that we know that the finance is handled by some department. What finance department do? What are they doing? I know that the finance is a concept of money. We all know that the finance is talking about the money, but this is not the point here. We want to know what is the things that finance or the finance department will do. These things will vary. There's like 5 points of them. Let's talk about first point. First point of the finance department to do is recording any kind of transactions, payment, salaries, revenue made. All of that should be recorded. So first thing that they do, recording of financial transactions between two brackets. One of them, as I said, sales revenue is an example. Also, the finance department will be enable the business to prepare what's called final accounts, or where the money should be stored as the account as the normal account for normal consumers. Even businesses they have that. So preparing final accounts is another task done by the Department of Finance, and also producing some information regarding accounting for managers, producing accounting info for managers. This is another task done by the finance department, and also we'll talk about the concept of forecasting the cash flow. It's a concept that we'll talk about in the next few days. It's about predicting the amount of money that will come in few years or 1 year or 6 months. So the forecasting of cash flow is another job that is needed to be done by the finance department. The last thing that the finance department they do, it's the idea that the important financial decisions, it's their task too. For example, uh, making financial decisions. Example for that, where to get finance from, decision about from where to get the finance to fund the business and to make it operating. So all of these considered as some sort of main rules for any finance department. One, two, three, four, five main tasks for the finance department. After that, guys, okay, we know that the finance department will do all of that. Let's talk about stop talking about the why, or we will say that to what the question of what. Now we will jump to the why the finance is needed. This is the what question, and this is the why. Why this finance is needed? Mainly, there's three things that you need to understand. If the business is still new, so starting up as a business, starting up as a business requires some sort of finance. Without finance, you cannot start up. This is the first point about the why. And number two, expanding is another thing. Sometimes you need any successful business, they need some sort of finance to expand. So expanding from existing uh, business position, it might require some sort of finance to expand. They might use this finance to even take over another company, or to buy new machines, or to open another branch in another country. So expansion is another reason for the need of the finance. So number three, the finance is needed to fund the working capital. The concept of working capital. The working capital is the capital that is needed. We'll discuss each one of these points in details in a few minutes. So funding the working capital is another reason for why the finance is needed. And we will talk about each one of these points here. Each one of them, we'll talk about it in slightly more details now. Sorry for my throat. Slight sickness. Don't worry, it's not corona. So 1, 2, and 3. Let's talk about the first point, or the starting up as a business. We talk about it and we do some notes about it here. Starting up as a business. What do you need to know? When any business maker or entrepreneur deciding to start a business, they should consider, buying some equipment, uh, renting some land, or buying or building new buildings for the business. So all of these need to be bought. So as a starter, and most of the time they are called. We call all of these that I mentioned fixed costs. So finance needed to buy fixed assets between two brackets equipment. This is the first point that you need to know about the first reason of the need of finance. So any finance need to buy fixed assets like equipment, or as I said, land. All of these considered as fixed assets. And most of the time, all of the new businesses, they need some sort of finance, or they need this concept to be exist. Okay. Sometimes, in addition to that, the owners might require or need to they need finance to purchase other assets. Other assets, they can be such inventories to store the goods, and these inventories, they need to be ready before the production process. So all of these need to be prepared before even getting starting selling for the consumers. And this kind of concept of caring about things like inventories is called startup capital. Owners may consider obtaining other assets between two brackets, as I said, inventories. So, to store goods even before selling process even, and we call this kind of finance, we call this the first kind of finance to buy the essential things. We call them fixed assets. And this concept of this kind of finance that is seeking things like inventories are called startup capital. We refer to it as startup capital. So this is all you need to know about the first point, or the first reason why a finance is needed for any starting up businesses, and these are some sort of notes need to be mentioned here. We defined the fixed asset concept and we defined the startup capital concept. Let's talk about the other reason or the need for finance, which is expansion, or the expansion possibility for any business. This is the factor of, let's talk about it here. First point that I need to mention, that the owners of any successful business, they would consider making a decision to expand. Why they need to expand? To make more profit. So owners may consider expanding with their successful business to make more profit. This is the first fact why they need to expand, to make more profit. So that these successful businesses will look for some additional fixed assets to be purchased, such as extra buildings, such as extra machinery, and they might even consider to buy another company to expand. Taking over another company is considered a type of expansion. So uh, uh, with such finance, additional assets between two brackets, as I said, example, machinery, could be bought, beside also taking over other business is a possibility for expansion. And taking over also of course require money. You cannot take over for free. So if you want to take over a company, you can do that, but you need to give some it requires some kind of financial arrangement to take over that company. This is the second point of discussion here. To remind you, we're discussing the idea why the finance is needed. We said that starting up businesses, and the second for expansion, and we will talk about the third possibility here, when they want to fund some sort of working. I forgot to mention some point here. Sorry. Uh, any kind of expansion, guys. Sometimes there's other thing besides buying a new company or taking over a company or even buying machines or whatever it is. Sometimes even the expansion can be happening through developing new products. And as you know, developing new products is talking about trying to do that to reach a new market. And this needs a decent amount of money or finance will be spent on the research and development of these products. So um, expansion could be through developing new product. Why is that? Why they need to do that? To reach new market. Uh, this finance needed to fund research and development for this product. This is the point that I forgot to mention. Sorry, guys. We'll go back to our third why for funding. We'll talk about the concept of working capital. What do you need to know about the working capital here? Just a slight note here I need to mention. As for the startup capital, guys, just to know what is the startup capital, we know that it's something about buying some assets. As a definition, it's needed as a finance that is needed to buy new businesses, to buy essential fixed assets for even starting business. So go back here to this point. Let's talk about the third reason of why, which is the working capital trying to fund or additional fund additional working capital. What is the additional capital as a definition? It's any sort of finance that is needed for a business to pay for the day-to-day cost. It's not talking about some kind of things that you will buy once and you will forget about them. No, it's about the day-to-day cost. This is the working capital was referring to. So we refer to it as uh, working capital sort of finance to pay to pay day to day costs, referred to sometimes some terminology as lifeblood of business. And this kind of capital is constantly needed, all because due to the fact that everyday activities should be paid through this or funded by this, like wages. I'm gonna example worker workers wages, what else, electricity bills, that kind of things. This is another, these some examples for the the capital or the working capital concept. Beside that, the money available to do all of that, guys, is considered as the firm's core working capital. It's a very vital thing for any business, and if you don't have enough of it, it might leading to the fact to stop trading as a business. Not because the business is not making profit, which is something that we keep talking about. We business cannot stop just because they don't make a profit, but also because they cannot, they don't have sufficient working capital to continue. Okay, so this is the point that I need to mention here. Business can stop trading due to not having sufficient working capital, not just being unprofitable. So this is to mention the point here. It's not just about not making profit, but also because not able to continue functioning. uh, so basically, the working capital is always need to be raised by any business. Just to summarize all of these points here. So since we're talking about it here, I'm just gonna zoom it here. So all of these three reasons, guys, sharing some concept, two concepts I need to talk about. All of these three cases, they need the finance to pay mainly for all of these methods, or all of these reasons for funding. They are needed to fund some sort. They are needed to find some sort of things. They need to fund some concept referred to as the capital expenditure. Capital expenditure, or it might be the reason for all of these sources of finance to pay beside the capital expenditure, paying something called revenue expenditure. We'll talk about each one of these in a few minutes. I'll zoom for you. So these are the main two reasons for all. We said why about providing a business. Now this why, to be more specific about it, it will be used to spend into these two concepts. This is the concept number one, capital expenditure, and number two, the revenue expenditure. As a definition, we will define it here. The capital expenditure is any sort of money spent on fixed asset that will last for a year or above. I money spent for fixed assets spent, I'm sorry, for a year or above. This is the definition of the capital expenditure. Okay. As for the revenue expenditure, as a definition, it's some sort of money or fund that is needed for the day-to-day expenses, which is not involving purchasing long-term assets. Like example for the revenue expenditure is gonna be wages or rent. So it's the money spent on day-to-day expenses. Example for that, just to mention expenses not involving long term assets. When I say long term, it means that something that required to spend on a long period of time. We're talking about example for the revenue expenditure. We're talking about the wages or rent, for an example. All of these considered as revenue expenditure. As a definition. So this is all you need to know about the financial needs of a business. We said that, just to zoom out here, we said that to summarize it, the financial needs of a business, it could be for starting up business as a startup capital, or it could be needed for expansion or as a capital to expand of the business, or it could be needed the finance for to fund an additional working capital. We define it the working capital. We say that the working capital is, we defined it here, is the sort of finance to pay the day-to-day cost. And beside these, we said that all of these reasons, it will be used to spend mainly on. We will branch it into two types of expenditure. It could be, as I said, capital expenditure, and it could be revenue expenditure. That's it about the financial needs of a business. This is was part one of this discussion. I will meet you in other videos to discuss the different source of finance and other kind of things. So I want to thank you at the end of this part for viewing, sorry, and see you in other videos, inshallah.